clearly it's unconventional, and these are long tenets of our economic system, that the president doesn't intervene in the Fed or in the currency market. What happens if he does and it continues?
Well, let's talk about a couple of things. First of all, I'm a little bit surprised that my colleague, my good colleague from Chicago, doesn't see the concern here. Like, what would happen in December?
LBJ did it. Nixon did it. HW to some extent did it. Come on, read up on history, gentlemen.
I did, sir. Thank you very much. And it hasn't been done under Clinton, hasn't been done under Bush, wasn't done under Obama.
We didn't have social media then, but there were many discussions, especially LBJ and Nixon, with regard to Burns.
Clinton and Obama and Bush did not need social media to comment on the Fed if they needed to. But let me just throw this idea out, Rick, which is this. What would happen in December if the Federal Reserve does not raise interest rates? To what extent will markets begin to believe that the president had pressure or succeeded in pressuring the Federal Reserve, and you have an immediate undermining of Federal Reserve independence to the extent that markets no longer believe the Fed will do what it believes to be best for the economy, inflation, and employment, but what it believes to be maybe best for for the administration?
Hypotheticals and what ifs. I just don't see it. I think this is really more about Jay Powell. And Jay Powell, I don't think is going to be pushed or manipulated into
just as
not doing
hypothetical
what
as
he's
my
going
idea,
to do.
Rick, that was exactly as hypothetical as mine. You don't believe that if Bush, that Powell will go. I'm just saying, I concur with that idea.
And I don't think market participants are going to jump to that conclusion.
It's a perception
As a matter of fact,
thing,
the
Rick.
curve's steepening today all long end. You know, right now, the 2 year is up one on the week. It's the 10s and the 30s that are moving higher. I don't know that fits with market participants believing the darker side of the interpretation of his Fed comments.
Jeff, doesn't it also create a headache not just for Jay Powell, but for Steven Mnuchin as well? I mean, we've had a history of Treasury secretaries having to come out and say, strong dollars in the best interest of the United States, going back to Rubin. And the idea was we wanted a stable place where all the money flowed. We have the safest and most liquid bond market.
Yeah, I agree with that, and I continue to agree with Rick. I think it's a bunch of noise. I don't think the president is pressuring the Federal Reserve. I think Jay Powell will stand on his own 2 feet and defend the Federal Reserve. And you're right, Richard Russell of the Dow Theory Letters used to say, the strength of a country will be known by the strength of its currency.
Matt, just want to bring it back to the markets. You mentioned that we need to find a new sector leadership. With all this move in the rates and discussion on interest rates that we've had over the course of the week, does that influence whether you want to be buying banks and whether that sector could be the next one to lead market side? Decent earnings this week. Yeah, decent earnings. It started on Monday. We saw a pretty good rally. We saw the 10-year spike a little bit, so the financials rallied. 10 years sold off a little bit. Financials held their gains, which was a good sign. And today we're starting to see them rally again. So maybe it's not just these big 5 tech stocks. Maybe we can find another leadership group, and the big banks have been a lagger for so long. Maybe they're the next one to take us higher.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.